Hello, and joining me this morning, I'm very pleased to welcome Vincent Juvyns, who is an executive director with JP Morgan Asset Management, responsible for the economic analysis for Benelux, France, and Geneva. Thank you so much, Vincent, for your time this morning. I know you're a very busy man with what's going on in the markets. And firstly, just to open up, we have all seen, whether we're working in the financial sector or not, immense impact due to COVID-19. Can you tell us what has happened over the last few months?
Yeah, definitely immense is the right word, because in the financial industry, we all have in the back of our mind the situation of the 2008 crisis. We can all figure out by now that it's much worse from an economic perspective. Social distancing, the fact that we are doing this online and not face-to-face or in the studio virtual is a clear example of that. I guess most commuters in Luxembourg knows it as well. They're all working from home. Shops have been closed, so the impact is going to be important on the economy. The IMF last week or 2 weeks ago actually mentioned that it expects the global economy to shrink by 3%. In 2008, we had still a positive growth thanks to the fact that China was also supporting the global economy. This time around, it's not the case. We had already a first preview of what to expect in Europe with the announced contraction of European GDP of 3.8% during the first quarter. So a huge economic cost, which will only increase if we keep those social distancing measures in place.
Yes, as you said, last week Eurostat announced that shrinking of the GDP in the euro area, but we have seen in the markets a sharp sudden rise.
Yes, indeed. Market have rebounded quite strongly in April. It's one of the best April since 1987. Market clearly digests the economic crisis first, but clearly were buoyed by the fact that you had all this fiscal and monetary intervention of the last couple of weeks, which really helped to put a floor below financial markets. So we've seen many states across Europe and across the globe have delivered massive stimulus, around $8 trillion at the moment. Central banks have really also reopened their monetary easing measure. The ECB clearly will see its balance sheet increase again, something which we'll see in the US as well. So this clearly helped financial market to rebound, even though week after week, they start to factor in the true cost of the crisis on corporate earnings. At the start of the year, markets were still expecting positive earnings growth this year. Now they expect a shrinking of around 20%, and this will probably be revised down going forward. So markets are not immune for, let's say, testing new lows. We see it again today. The market sentiment remain fragile and will remain so as long as we don't have a sustainable solution on the health front, as long as social distancing will be maintained in our economies.
And just thinking about Europe in itself, some countries feel that it's been working country by country rather than as a union. And some people feel that southern countries are most impacted. So what do you think will happen when we think about the European countries, the north and the south, and what can southern countries perhaps do to improve specifically their economic environment, to stabilize the euro?
Yeah, there are actually many questions in one, but indeed something we've learned again during this crisis is the lack of cooperation among EU member states. Clearly, we will need to work on that going forward. That's something we've seen also differently, but during the EU debt crisis in 2012-13, and clearly we need to improve cooperation in Europe. This said, we can probably understand that different measures were put in place among member states because they weren't hit at the same time and with the same magnitude. If you look now at the exit strategy, look at the example of France. France will differentiate its exit strategy region by region. So obviously, in Europe, it makes much more sense when you look at the situation in Luxembourg, for instance, which is quite good compared to Italy or other countries. It's clear that you can differentiate the type of lockdown you put in place. As we exit this lockdown, I believe that we will need to cooperate again. Summer holidays are coming up quite fast. Many of us will want to probably cross the border for some well-deserved holidays. So clearly, on that front, cooperation direction will be key to tell European citizens whether they're allowed to move freely within the Schengen space. In terms of lockdown measure which have been put in place, I guess in Europe, like globally, there are actually two directions. The Chinese one, which is the lockdown the most difficult that you can figure out, the one that we had in France, for instance, or in Italy, or the South Korean approach that you see implemented in Netherlands, in Germany, or in Nordics countries. Clearly, history will tell us which approach was best from a health perspective. From an economic perspective, the soft lockdown is obviously the one which is the least painful for the economy. But going forward, I expect more and more countries to move towards a more South Korean approach, which will rely on massive testing, on tracing those infected by the COVID. All in all, a policy that has been well implemented in Luxembourg, I would say.
And just thinking about the second part of my sort of long question about what Southern European countries who may have suffered the most, what could they do to stabilize the euro, perhaps?
I guess in Europe, to me, the answer to this type of crisis is that we need more Europe. More Europe is, in my mind, the clear solution to what we are confronted with. If we had a more autonomous, let's say, political project with its own budget, we could have reacted more strongly to the crisis we are facing. So clearly, I believe that in coming month and coming year, we need to discuss and maybe to break some taboos in Europe, like the concept of Eurobonds and like abandoning some part of our sovereignty for a supranational entity. Clearly, we had not enough Europe during this crisis, and more Europe would have helped. So I believe that that's the way forward, and we've made some steps in the right direction, but we are not quite there yet, in my mind.
And just moving across the pond to the US, perhaps coronavirus hasn't taken full grip there yet. And over there, the states are not all linked up either. The approach seems to be a bit piecemeal. How do you think the US will recover from this?
Well, the US will probably in the first couple of weeks, or the first time the crisis being hit the most. And you see that unemployment surge massively over the last couple of weeks, something we haven't seen in Europe actually. So we're used to see this type of phenomenon in the US. This said, the US economy is in essence more resilient, more flexible. It has showed it again in 2008. So we'd expect the US to rebound more strongly after the crisis. There's one major consequences of this COVID-19 crisis, its impact on global trade and globalization. And Europe is a heavy trade dependent economy, which is less the case for the US, which rely more on domestic consumption. So from that perspective, I would echo what the IMF said in its GDP forecast. The US should in theory fare a bit better than Europe in this respect from a pure economic perspective. From a health perspective, obviously, like you mentioned, the fact that they react a bit late to this pandemic makes that the human toll will probably be very heavy in the US, obviously.
And just thinking about the markets, it's not all equal. There are, as always, winners and losers. We've seen what happened to oil prices recently, but on the other hand, we've got Zoom doing rather well. We're working on Zoom, Amazon, Netflix. So can you tell us a little bit about the winners and losers?
Yeah, clearly, like in every crisis, there are winners and losers. We've seen from a regional perspective that market like the US or like China did much better than market like Europe, for instance. This has to make with the sectoral composition of the equity index. For instance, if we look at the US, the technology sector account for roughly 30% of the index. And as you mentioned, we are on Zoom today, but many tech companies like Zoom have actually flourished during this crisis. We had a couple of earnings reports from those big tech last week, and all in all, we can say that they've reassured, really, they managed to fare during this crisis quite well, and they are clearly leading the performance of the S&P 500 in the US. So among the winners, clearly IT, healthcare, consumer staples. People still go shopping and shop are open. On the loser side, you have central bank which lower interest rate. That's not positive for bank. You have possibly more default of household corporate. That's not positive for banks. So you've seen bank under quite some pressure, and you alluded to the oil price in your introduction, but indeed the energy sector has been hit quite badly. A sector which surprisingly is more present in the European index than in the US index, for instance. So clearly US, China, and some sector fared relatively better than other in this environment.
Now, you've just mentioned China, and when we think about other emerging markets, we don't hear perhaps all of the figures coming out of emerging markets as to how coronavirus has hit, but we can guess that it'll be rather severe. Can you tell us how their economies will be affected, and also, separate to that, the Asian markets, as they were the first hit and the first to kind of resurge and come out of it?
Maybe first, all EM like DM countries are not equal. So you have very different situation from Africa to Latin America and Asia. And clearly it is, again, a crisis for EM, not so much at this time a health crisis, because it seems that the pandemic is in most cases rather under control, of it's not as acute as it is in the US or in Europe, but the economic consequences of social distancing, of lockdown, are quite important for EM. Many of them are to require an emergency assistance from the IMF, for instance. So this showed that obviously with the risk aversion we've seen on financial market, we had outflows from the market and financing difficulties for these countries. But let's focus then on your second part of your question, and maybe more on Asia, where we see an improvement of the situation. First, on the economic front, you see that the PMI, on this advanced economic indicator, which allow us to anticipate the economic development in one economy, are recovering quite fast in China. I obviously discuss at JP Morgan every week with my colleague based in Shanghai, and they report to me that it's not fully business as usual, but not far from. Over the weekend, they can still can again go shopping with their relative. They're back in the office, which is not my case, for instance, which is a U-turn compared to what we had in January, for instance. So clearly the first sign in China and in Asia are quite encouraging on the economic and corporate activity level. And you see this well reflected on financial market. Clearly at JP Morgan Asset Management, China is a key focus in our investment strategy, not only on the equity side, but also on the fixed income side. And you see that Chinese fixed financial market have performed quite well since the beginning of the crisis. So clearly, we have the emergence of a new global leader at the moment, which is China. It's not new, but clearly the COVID-19 crisis somehow probably reinforced this movement, at least from a financial market perspective.
You said when you talked to your colleague over in Shanghai, he said it's not quite business as usual. A lot of people are thinking that it may never be business as usual, and due to this lockdown globally, a lot of our patterns, our life behaviors might fundamentally change. Do you think about the trends for the future out of this very, very unusual situation we have all been through?
Oh, there will be a structural change, definitely. And I guess for many, the fact that they've learned to work from home a bit more than they were used to is a good thing, and will become structural by nature. I must say we're blessed at JP Morgan. This is something which was already encouraged quite a lot before, but I guess that's, to me, a no-brainer, and which has many benefits. I don't think that the workspace will be replaced entirely. Yes, we all need those social contact. What makes us efficient from home is the fact that we have this connection in the office and this social connection, live connection. I still believe that it's remain important. So definitely the the work environment will change for good in the future. So that's certainly one thing. In terms of economic leadership globally, I expect indeed that the country which will come stronger of this crisis, and in Asia, I would pinpoint China, is also something which I see structural by nature. So these type of leadership change coming from Asia. In terms of globalization, it's probably something which will have an impact on globalization, but we should remain prudent at this stage. I heard a lot of voice claiming that we should relocalize the production of almost everything. Specialization has always been key in economies. There are people specialized in journalism, in economy, and so on. Everyone shouldn't be able to do everything. So, and that's also true for countries. Mouth mask production may be repatriated in Europe, for instance, but I don't think that we are going to manufacture iPhone in Luxembourg or Belgium, for instance. So we should also remain realistic. Globalization will still remain present in the future, but I would expect some change. And for asset manager, it will be key to really try to capture those change. And what we see since the beginning of the year as a key theme in the asset management industry is again the focus on ESG criteria, environmental, social, and governance criteria, because those companies which have a high ESG score really fared better in the current environment than others. You see this reflected in the performance, not only their earnings performance, but on financial market. And that's something which will only gain more traction in the current environment. So clearly the way forward for the asset management industry and the financial industry is obviously more ESG oriented than ever.
That's a very interesting point, actually. I'm sure we're going to hear much more about that growing in the future. And thinking about the recovery, people are talking about V and U-shaped recoveries. Which do you think it will be, and how long do you think it will take?
Well, I had hoped until a couple of weeks ago that we would experience a V-shaped recovery. What we are seeing already in China, which gives us an idea of what to expect in Europe, clearly is more like a U-shaped recovery. First in China, because it may get better in China itself, but China is still dependent for its export from Europe and the US. As long as we are not doing well, it will be tough for China. In Europe, what I hear from health experts is that we're probably going to have to live with this virus for quite some time. So meaning that getting back to fully business as usual is unlikely in the short term. So which is then more in line with a U-shaped recovery. This said, I believe that people will want to resume the normal level of their life after lockdown are lifted. And clearly, there will be economic momentum and strong economic momentum at some point, probably more in 2021 than in the third quarter of 2020. So a bit patient, but again, I do see, I do expect a rebound next year, which is also in line with what the IMF expects, for instance. So we will see it. And there's a life after the COVID-19, and China shows us this every day.
That is very good to hear. And just bringing it back to our base here in Luxembourg, where of course we've got many financial service industries dependent on funds, what do you think the economic effects will be here for us, and particularly those working in the financial sector?
Oh, it's for me as an economist, maybe hard to speak from an industry perspective, but Luxembourg clearly over the last couple of years have reinforced its dominant role as the financial hub in Europe. I guess Brexit is probably more important in this respect than the COVID-19 crisis. So to me, the fact that Luxembourg showed also that its ability to cope with this health crisis quite well, and again, I would refer them to the number of cases of death in Luxembourg, show that it's not only a country where financial regulation is strong, but where standards on health standards and political standards are quite strong as well. So as definitely this reinforce, let's say, the central place of Luxembourg, or the trust we can place in the Luxembourg country as a safe haven for its financial hub in Europe, in my mind.
And from your professional point of view, any final words?
Or clearly one of the most challenging crises we have ever been through. And that's something. Yeah, I thought 2008 was definitely the worst year. Clearly, I've been very surprised. This set, I guess, we should in all crises see the seed of opportunities, and clearly the way our work environment will change. There will be positive development coming from this COVID-19 crisis. The fact that corporate have been stress tested in many ways has also been a healthy exercise in some ways. This will obviously force change in our societies. My children are following lesson on Zoom like everyone else at the moment. So for them, it's also a huge opportunity to get grip of new technologies, and the technology adoption will be reinforced by what we're faced. And I believe that our economies will come stronger from this crisis, but that we still have many challenges ahead. And clearly, the way to finance our development going forward will be one of them. We've seen a budget deficit debt level increase quite fast in Europe, and will continue to do so. We will need to find solution to make that this debt remain sustainable going forward. So clearly, easy monetary policy is there to stay for long. So I would expect that, at least as in one of the conclusions, interest rate will remain low for a very long time. So that was the most obvious consequence that I drew from this crisis.
Vincent, thank you so much for your time. We wish you well over this very busy period for you and all those working in the finance industry. And of course, for many of us, it affects us in so many different ways in our lives. Thank you very much for your time today.
Thank you.